So, welcome back. It's been a little bit of time. Today we have an interesting topic to cover. Recently, the SEC has essentially come after crypto. Now, there are two ways in which they've done this. All right, they've gone after exchanges, and that actually breaks into two of its own ways, which is A, they went after Coinbase for listing unregistered securities on the US market, and they also went after Binance and Binance US. Now, obviously, that first complaint would apply to Binance, Binance US, Kraken, Gemini, any exchange. But specifically with Binance, what they've done there is they've essentially filed a lawsuit against CZ and against Binance directly. The purpose of this lawsuit, which applies to both Binance and Binance US, is that they claim that they have evidence that Binance was commingling funds, user funds, with a investment firm that was founded and owned by CZ Binance, meaning essentially that they're claiming that Binance was using customer funds to invest with, which is essentially what FTX was doing, and they were losing big time. Now, the question is, we don't know whether Binance is losing big time or if Binance is actually even doing this, but the fact of the matter is that, I don't know if it would really shock a ton of people if Binance was doing this. Now, if it's true that Binance US was participating in this and the funds were actually from Binance US were being used by an investment firm owned by CD, like if this is actually all true, well, that's a pretty damning thing for Binance, and the SEC is going to have to provide proof of it. So we're not going to focus too much on that because that's more legal proceedings. We don't know anything about whether this is true or not. But what we can focus on is them talking about securities. Now, essentially what the SEC said to Coinbase is that you're operating an unregistered national securities exchange, which means they are selling securities that were not registered with the SEC, which is the United States branch of the government that is meant to control or regulate securities. So the first thing to understand is really, what is a security? Like, is there any foundation to this claim? And keep in mind, the SEC is essentially saying that Bitcoin is the only thing that's not a security, because all of the DeFi assets that they've listed, well, if they've listed those, pretty much everything else falls under the same category as those, meaning that anything besides Bitcoin would essentially be a security. They haven't specifically named Ethereum, but they are implying Ethereum as well with the other assets they've named. So, okay, we go back to what are securities. By the SEC's definition of securities, it essentially means that securities are fungible and tradable financial instruments. They're used to raise capital in public and private markets. Okay, pretty simple, right? Company is starting up, they need capital, they launch a security, which is a stock, they sell that stock. The people that buy it now own shares that are a percentage of the company, and the company then uses that equity and they can do things, right? So the company can sell some of their stock now to the public. They get the money in return. They use the money for certain things. All right. So this gets us into what the types of securities are. The first one is equity. It gives you ownership rights, basically, if you're buying stock in the company. Then there's debt securities, and these are basically like loans that are repaid to you by periodic payments. And then there's hybrids where you have some equity and some debt. All right. And the one thing to remember is that public sales of securities are meant to be regulated by the SEC. The SEC has control of that. So now we look at a couple of things that they always mention when talking about securities. One is the Securities Act of 1933. Now, the Securities Act of 1933, that's the first legislation at the federal level to regulate the US stock market. All right. Previously, it was regulated at the state level. And keep in mind, this is 1933. This is a very, very old act. Under the law, anyone who wishes to sell investment contracts to the public, they have to publish certain information regarding the offering, right? What are they offering to the public? The company making the offering and the principal figures of that company have to do that. Okay. Now, the other thing is the Howie test. This is another thing that you'll always hear referenced when people are talking about securities. So basically, this is a test that is meant to tell whether or not an investment should be regulated as a security. So this is like a 4-point test that if you meet these conditions, you are a security. So the first is that there's an investment of money, right? People invest money into this. The second is that the investment is made into a common enterprise. So essentially a common enterprise could refer to as a company or a group of people. Like in DeFi, we refer to them as projects, but in reality, they're operating as companies, right? Groups of people, employees, people being paid, and they're using money from their ICOs. So the next one is the investors expect to make a profit from their investment. And they do. Anytime you invest in a DeFi asset, you do expect to make a profit. That's why you're investing, right? Granted, there's risk and reward, but that's really why. And then any expected profits or returns are due to the actions of a third party or promoter. And that really applies. It's a very general rule, but that really applies to any type of promotions are being done, any third parties are promoting, influencers, whatever. Well, technically, if by doing that, cumulatively, it makes the asset more popular and more people buy it, and it meets those other conditions, the Howie test would state that it's a security. So now when I look at this, in reality, a lot of DeFi assets are securities because there are companies behind them or groups of people. There's an investment of money. The money is made into that common enterprise. They can sell to the public and use the funds to pay their teams, to build the product, to build the blockchain, right? To build functionality, scale the infrastructure, release new codes on mainnet and stuff. Like, it's all being treated as a company. And in reality, that's kind of what it is, right? If you're dependent on a group of people to perform in order for that DeFi asset to do well and to gain more functionality, well, then that common group of people, that's the common enterprise, right? The investment of money is what they've put in, what you've put in. And every investor expects to make a profit. And there are a lot of people promoting. These are third parties. And, that can result in more people. Like, if those third party or promotions result in the asset doing well or more user adoption and the value goes up, it's met all 4 points of the Howie test. So it's not to say that the SEC is wrong here, but the thing is, a lot of assets have varied use cases. So for example, you can buy a DeFi asset, and yes, it may be treated as a security for a certain period of time, but over time, as decentralization continues to occur and the common enterprise or team has less influence over that asset, well, suddenly it's a security and a commodity, because now you're not holding it essentially as, something that's going to go back to the foundation. And if the foundation ends up selling most of their assets and now they're just operating, based on the same personal investments they have, like whatever they've bought personally, well, then technically that team is now becoming decentralized. Now, that's not happened specifically to a degree everywhere where I'd say they aren't securities, but they're not taking any of this into consideration. So as these assets turn into commodities and they have different functions like staking and, you can lend, you can do so many other things with your assets than you can do with stocks, you start to realize that, well, maybe these other properties are not being covered by the Howie test, right? Should they be part of the Howie test? Because otherwise we're just ignoring them. So essentially what's happening here is we're taking these properties that are so general that all these DeFi assets technically fall under them. And that's why the SEC is saying everything's a security, right? So you understand their logic, but it's because the Securities Act is so broad that it essentially covers all of crypto by ignoring all of the things different in crypto and all of the things that have changed over time. So in reality, there should be like a Securities Act of 2023, and that should say, or a Crypto Securities Act of 2023, a Digital Asset Securities Act of 2023. The SEC should do some new regulation and say that, a ICO for these purposes constitutes a security, whereas in the future, if it's meeting these properties, it's no longer security. It really depends. There's no clarity. The companies like Coinbase don't believe that they are selling securities because many of these are no longer funding the teams that are running them, right? They have essentially broken out now into, assets where there's minimal development and you shouldn't really be considering them securities. They've turned into commodities. So there is a hybrid there that is not covered by the Securities Act. So I think that though the SEC has some grounds for their claims, this is really going to have to be like put together by the courts. And that's what's going to happen now. Coinbase is suing the SEC. The SEC is suing Coinbase, and the courts have to step in and make a determination as to who they agree with. And then let's say they agree with the SEC, well, then Coinbase would likely have to delist all their assets. And if they agree with Coinbase, then Coinbase would have to would keep their assets online, and then it's up to the federal government to figure out how are they going to regulate crypto. So we don't really know. I mean, I still think that this is a pretty huge risk for the DeFi market, because essentially, if you look at what happened in the recent drop when all this news came out, the main thing was that DeFi crashed all within a couple of hours. Now, if it crashed within a couple of hours, it's not like retail's doing that. It's not like everyone in the US just woke up at the same time and started selling. No, that's not what happened. What really happened here is I think we had big firms that were liquidating to reduce their risk and exposure. They probably anticipated that things were going to drop. So they were like, okay, let's just sell now and get them at these prices, liquidate what we can. And I assume that as soon as that happened and a certain amount of sell pressure started, well, then you start having long liquidations. All of these assets are DeFi assets are highly leveraged, right? There's a lot of people with open longs, open shorts, all that kind of stuff. So we probably had this sell-off that came from some institutional capital. That sell-off then leads to liquidations of longs, and that kind of cascades. And then you have some people that are just in the crypto community, maybe some retail investors that are scared that just go in and fuel that fire and keep selling. And I think that's why we saw such a big drop. And now it's somewhat leveling out. But I don't know if it's over, because honestly, if other large funds or other large players decide to do the same thing and sell, and they liquidate at market, well, then you're going to have the same thing occur in different stages and things could drop further. So in reality, this is a fairly big risk. And that's why, like, early on when the SEC started making these claims a few months ago, I told you on Twitter and I told you in my videos, I've started reducing my DeFi allocation. I reduced it significantly, like down to 5% of my total allocations. And part of the reason I was doing that is because of this, right? I didn't want to continue accumulating if the SEC was going to take some action, because I knew that would cause all the assets to drop. It doesn't really matter which DeFi asset it is. They're all going to react to this. So mainly at this time, I think the only key here is that the majority of the DeFi community is probably not selling, right? They're probably holding their assets because they believe in another altcoin season or the future of DeFi, which I totally understand. I see a future there too. It's just starting to look like maybe that future won't include the United States. Possibly. I don't know. Or maybe people will start moving to DEXs to do all of their DeFi purchases and they just won't use centralized exchanges anymore. I don't know that either. Who knows if the SEC or CFTC will pass any laws that say that that's illegal for US residents, like you can't use decentralized exchanges. I don't know. We're very early in this industry that we don't have all these answers. So I do still think DeFi is a significant risk because there is very possibly going to be downside. Now, things could flip also. We have to look at the other part of the equation. And that essentially is that, well, right now we also have US courts making decisions, and some of them have kind of sided with Coinbase in some degree. So we see how this plays out. And if it's in Coinbase's favor, well, then maybe, we won't be looking at the SEC regulating crypto. It's possible. I don't know. If that was to occur and the courts make a specific guidance to the SEC that you have to provide clarity and the Securities Act of 1933 is not enough, it doesn't cover these new properties, well, then I think DeFi will continue and will gain a big pump. We'll see users in the United States start buying back in, possibly funds buying back in, and then we just go back, we level out to where we were. I don't see a huge pump incoming because honestly, I think what we're still seeing here is that this is all happening at the time that we're coming towards a recession. So there's no retail investment anyways. And most people, regardless of what happens, until there's crystal ironclad clarity, they'll probably be reducing DeFi allocation. Like at such time that we start seeing global markets shift and we start seeing more investment coming back in and rates are going down, we start to have that monetary policy shift where more liquidity comes into markets, everything starts pumping. When that happens, I think we'll see probably reduced activity going into DeFi unless we have clarity from the SEC. And I'm talking specifically about the United States. DeFi may still pump massively at that time. It'll just be a percentage of liquidity that would have come from the US won't. So because of all of these factors, I'm hanging on to my DeFi assets. I sold the ones that I had just for regular day trading because I kind of day trade DeFi assets at the same time just to kind of swing trade them. So those I'd sold before the drop happened, and I essentially liquidated into Bitcoin. So I basically turned all of my day trading into just Bitcoin, and now I'm not day trading. I'm just holding it until I know what's going to happen because I'm not doing derivatives, which means I can't sell short, and I'm not really going to go in and start using high derivatives exchanges right now when things are so high leverage exchanges, when right now things are so unclear. So anyways, this is kind of my overview of this. Right now, I still think risk is high. So I'll look at charts, but I'll take that into consideration. So when we have an analysis video coming up, I'm going to do one right after this where we talk about Bitcoin, Ethereum, EGLD, and Cardano. I'm going to be very much taking this into consideration and seeing what are the targets, but how might what's happening in the US affect them. I think right now we're still looking at a point where there's nothing I'm seeing that says markets are just going to pump. And that's kind of where the economy is right now. But I do think that come next year when we have the Bitcoin halving and we start to see the Fed and Treasury start shifting monetary policy and lowering rates, well, then I think we're going to start seeing that liquidity start flying back into all markets. And I very much think then that DeFi could have a massive pump. We just don't know yet exactly when it's going to occur because it's very much related to what is happening in global markets too. So keep all this in mind. I hope this was informative to you and you kind of have a better idea of what's going on. The main problem that the SEC really has is that they provide a lack of clarity. They have zero clarity. They just regulate by enforcing. And that's not a good way of regulation. It's pushing companies out of the United States. It's killing innovation here because now you're going to have less jobs in these fields and you're going to have companies not wanting to open up crypto services in the US because why would you want to come to a place where you're not allowed to do what you need to do to make your company flourish, right? You go somewhere else. So a lot of things can happen from this. Anyways, keep everything in mind. Hope you enjoyed the video. Let me know if you have any questions, throw them in the comments. And if you want to reach me on Twitter, make sure you follow me there. I'm very active there. I'll catch you later. Peace.